All right, guys, coming at you with a video about volume profile use cases. So I want to talk a little bit about a layover on prior day volume profiles. We're going to talk about the POC and the large amounts of volume we have accumulated in day prior. So, and of course, stacking those with the catalyst here. So we're going to jump right in to yesterday's trade day. We had a absolute massive long squeeze day, not to mention our gone time cycle, but we had a few different, a lot of different reasons for that. Our core support was 450.50. That's what we had picked up, 450.50. Now, if you notice right here, 450.73 to 65, we have a prior very big algo over under. We have the standard deviation center regression trend of the weekly, daily is a little bit under it, but coming in hot there as well. So we had a lot of different supports right around 450.50 coming in. But most importantly, I do want to talk about the volume profile of the prior day. So this was Friday, okay? As you can see, our volume profiles are very, very high at 450.70s, and then our next largest point was at like 450.25. So without really getting through the algo and the POC of the prior day, which is going to be Friday, we were going to go straight up. So 450 like 75 to 450.60. So we had just about 450.50 tag there. Now let's take a peek at what TradingView looks like on this. It's a little bit cleaner. So now I want you to keep in mind as we focus here. All right, so we have this highest traded volume at 450.85, just about. This was again Friday's trade session. So anything opening and pushing above 450.85 was going to be a squeeze zone. And why we're using that is because for the trade day to start on Monday, we're going to look at the highest volume trades of the day prior. So we know that we have some really big support right under 450.50 and some really and our biggest support at about 450.80. So 450.80 to 450.50 was our watch for squeeze. Now we have a little bit of a cheat code here with the gone time cycle that we actually kind of knew the squeeze was coming yesterday. We can't really get into that on live, but if you want to trade with us, Gone Math, check the description out. We can explain exactly how we predict these high volatile moves coming into Gone rotation days. Now, this is the huge day up that we had. Now, the volume profile the prior day suggests, well, we have 2 points of interest at the end of the day. You've seen the light gray boxes, right? So if we come over here and we have huge, again, profile here, huge profile here, and this is the POC and the red line, okay? Now, anything above that is going to be squeeze happy, right? Well, as we kind of came into, the 15 here, we were holding on top of the 50 RSI channel. We were coming on the MAC 0 level and across. Everything was looking very bullish for the continued squeeze back up. And everybody knows low volume short weeks equals, well, ability to go up, up, and up, right? So the big incantation here from yesterday's POC was long, right, into next highs because we were going to break out of the consolidation. Two different things I want to touch on here is our Fibonacci that we drew from CPI, right? So we have CPI here, and we go from this to the 1618 and then to the 2618, okay? And we had a couple consolidation days because CPI is a rocket ship, right? And when something rockets like this all the way up, it needs to calm down and wait for the moving averages to catch back up. So as we shot up on CPI and consolidated, the 200 and 100 moving averages on the 15-minute chart, we're coming up to catch support, right? So not only do we have a 1618 and 100 to worry about, so we're up over the 1, missed the 2618. Now here's the biggest thing. It shied the level, right? 2618 shied. We never hit the 2618. So my easy target for the trade day of Monday is as long as we hold the POC, standard deviation and algo, we will fire off right to the 2618. And then if we go above that, we have a really big TOS intraday 626 algo 453.42. And it actually even squeezed past that a little bit into 455, right? And then we have a little bit of a relax day, okay? And let's talk about why. The biggest gap that started the downtrend was not filled. This is right here in the gray box on the daily chart, okay? This is an unfilled gap. So what did we do? We did it again. We shied the price action of the gap, right? So as that came up, pushed, never filled. So what does it do? It needs to relax, find long support again for confirmation, and then push back up into the gap fill attempted tag. Because when something comes in on the daily chart of a gap or any gap tag, the first gap tag usually has a high percentage chance to fail. So fail to fill. Okay. So when we have a gap down right here, starting into the volatile months of October, August, September, our seasonality, right, of downside, we left this gap and go. And look what happened on the first attempt. Fail. Okay. It failed to fill. And 9 out of 10 times, I'd say that's what happens. Then lower high continues a new trend because this was a gap and go. It gap and change direction. It went another way, right? So as we're coming all the way back up off this massive squeeze, we have pushed into that gap again, and we just didn't have enough steam to cut that out on Monday. So what is it going to do? Comes back down for some more confirmation of strength and finds one of our favorite 50% retracements, which is the half candle retrace, right? So we have two really big levels here to watch, 2618 and 452.24, which is the major daily level, and waiting for what? Moving averages to catch up, right? So we're on the 5-minute chart now, and as we look, we had a little breakaway squeeze day. And what happens when we have breakaway days like we talked about on CPI? Big rush up, has to consolidate or pull back to wait for moving averages. That's one of my favorites right here, the 666. And this was a short out of the gate to potential long off the 666 magnet. So the 666 was never tagged yesterday. It ran it, finally caught back up as support, and we are still looking for the continued magnet long because it is a short week, holiday. We have general consensus in seasonality of the Santa rally and holidays. It usually goes up around holidays. All the seasonality to close this gap yet. So I'm thinking into, well, tomorrow we have the FOMC today. NVIDIA earnings after hours. So you're going to want to see that pressure from the prior POC zones and prior half candle retrace, which right here is the half candle of Monday. So if this is Monday, this is 50% of the candle's body. Okay. We use that a lot. It's a really, really big marker. So this orange dashed line. So all you got to do is wait for that little bit of a pullback, confirm support. 666, half candle retrace, algo, 2618, which is the 5250. This was our target on Monday to come back down support. So prior target, right, became resistance to support. And thanks to our 20-year flipperoo here, we had a massive move right off the 2618. That's that giant candle right here. So we had that massive move up. So what do we wait for? Well, a back test of that level to continue higher to finalize the target of 455.50s, and that will fill that gap. And that's going to be the ending of the long for me. I don't know what it's going to do after that. I could squeeze all-time highs, doesn't matter to me. But my long ends right there at 455.50. So that's a little example of how to use some of these profiles from the prior day to give you general zones and volume. So if you're looking at some of this stuff right here, even you got the 5-minute chart. Look how high that squeeze of the 20-year was right here. Okay. Very big zone right here. So that's more of a confirmation zone. And then we have another really big zone below that here. And then some of our bigger zones obviously way up. But these would be the two zones I would watch, zone 1 and zone 2, because of the prior day's volume profile. Even on the 5-minute 15, they work very well. So large zone 1 here, large zone 2 here. So if you wiped out zone 1, you're looking for 2. Obviously, we stack catalysts. So we're waiting for stuff like the 666, low VWAP, half candle retrace. So the first zone that washed out through, no big deal. We didn't have any confirmation of support there. We consolidated right there, showed no highs. The VIX had gaps to fill to the upside. Dollar looked strong for the early part of the morning. So yeah, we had a lot of consensus saying that we're going to wipe out and go short side because we were short bias very early, back to support, back to long play, right? So with that being said, zone 1 and zone 2 were both hit from the prior day's volume profile. Now, what does that tell us about the volumes highs of the day? Well, that's going to be our target. So this dead range of market orders in between the very big range of limits are what we're going to use for our targets, right? So again, huge limit, right? So those large volumes are block orders, okay? Now, what's our target? Well, as long as we stay above, we can look at current and prior day volume. So we're above the POC of current day right here. And we have a whole lot of nothing stopping us to prior day's POC. So I'd say my first long target would be upwards of 454. Just climbing, right? So zone 1, 2, back to POC yesterday prior, and then potential gap fill. Now, obviously, we're going to get some static and hesitation on where? These giant volume profiles from yesterday, right? So if you chart those out, you got pretty much a clear shot up until it starts. I'd say with that 200 SMA here comes in, probably we're going to squeeze up to here. And when we come into that 200 SMA in the 5-minute, you're going to run into a lot of these high volume profiles. So pay attention to these day-by-day profiles. And on the next video, I will link in the description below. I'm going to go over all of these indicators, how to set up this volume profile specific to TOS, the way I have it here. So tune in on the next.